Welcome to Kaiser Watch with John Kaiser. I'm your host, Jim Goddard. Welcome back to the show, John.
Jim, pleasure to be back on the show.
John, why did Barrick say goodbye to Perpetua Gold Corp?
Barrick bought a strategic 19.9% stake in, it was called Midas Gold at the time, in May of 2018, buying 46.6 million shares at $1.06 for about $38 million US. It recently sold 5,382,587 shares through NASDAQ, which it reported doing on June 6th. Since then, Midas Gold underwent a 10-for-1 rollback to become Perpetua Gold Corp. So obviously, Barrick exercised its right for a while to maintain its 19.9% interest, which is why the $44.7 million grew to $5.4 million. Now, when you do the number, and stock's around $4 or so right now, Barrick took at least a 50% bath on this position. So why did it step out? Well, on the plus side, a new shareholder, the Copernic a fund from the Copernic Global Investors LLC group, through which manages a group of mutual funds, picked up the position. So it's now in an investor's hands. Barrick at the time, the talk was, it was interested in the Stibnite project, which is in Idaho. It'll be an open pit mine that would produce about 350,000 ounces gold annually, but it is refractory ore and it requires a pressure oxidation plant to crack the refractory ore, also known as an autoclave. Barrick has autoclaves and roasters in Nevada, and the idea was that maybe they would take over Midas Gold, develop the Stibnite mine, and truck the refractory ore to one of its roasters in Nevada. But remember, this happened in mid-2018. In late 2018, Barrick merged with Randgold, and Mark Bristow took over as CEO. And at first, that didn't really matter, but in mid-2019, Newmont and Barrick decided to pool their Nevada assets to form the Nevada Gold Mining joint venture. And the idea was both companies had roasters close to initial mines, but then they developed other mines, and they would truck the ore from one mine to the other roaster. And by pooling all these assets, they could rationalize where the refractory ore was going and save money in this manner. And as a result of this, Barrick owns 61.5% of the Nevada Gold Mining joint venture and Newmont 38.5%. So two things are obvious from this. One is there probably isn't surplus capacity left to take any ore coming from the Stibnite mine if and when it ever gets permitted. The other is the joint venture is now split between two giant mining companies, and doing so really makes no sense at all, or it'll be difficult to get both sides to agree that this should be done. So if Barrick was going to ever do anything with Stibnite, it would have to buy out Perpetua Gold Corp and develop it as a standalone operation. Now, Mark Bristow is a no-nonsense type of guy, and he probably wasn't impressed in late 2020 when John Paulson, the biggest shareholder of Perpetua Gold Corp, had some sort of hissy fit and fired Stephen Quinn's management team, which was the technical engine behind the whole permitting cycle, which was getting close to the final stretch. And then he replaced them with all these other people who were more sort of his, echo chamber type. And the company has now had several years added to its permitting cycle. It's still not clear when they will get the permit to develop the Stibnite mine. We did get good news this week. A Clean Air Act was granted. This is one of many permits that are required under the National Environmental Policy Act. And it's unclear where this is going to go. Now, I still have it as a good spec value rated favorite with the extra bonus that if it ever goes into production, it will provide more than enough antimony that the United States needs, and will have extra for its friends and allies, because 85% of antimony currently comes from China, and should the relationship between China and the United States become one of nothing moving back and forth between the two countries, then we would have an antimony supply problem. But the stock is also cheap right now for another reason. John Paulson last year decided to divorce his wife, and this has not turned out to be an amicable settlement. So now that it's in court, the two parties are feuding over who gets what. And the thing was, when Paulson made his billions in 2008 shorting the collateralized debt swaps and all these other instruments that were created as part of the mortgage securitization process, he ended up reinvesting it in a lot of these gold companies whose projects at the time, well, were not in the money. At least they were briefly when gold rocketed to almost $2,000, but not when they had settled back to $1,300. And yet these companies carry a substantial premium in terms of what gold might eventually do in real price terms. The problem is, if you're a substantial shareholder like John Paulson, it's not so easy to get rid of a company which is significantly overvalued. Now, Perpetua Gold Corp is not overvalued. It was at the time he got involved, because the pre-feasibility study indicated that it was marginal at the $1,300 gold price, but we've seen a 35% increase in the interim, in that $1,800 to $1,900 range. The project is very much in the money. There is concern as to what happens when they update the feasibility study after they get the final permit and know everything that needs to be done to satisfy the permitting body. How much higher will the capital costs and operating costs be? Hopefully not a significant surprise, but the 35% real price increase that gold has undertaken since then, this makes a significant difference to the value of the Stibnite project, which should get permitted and developed sooner than later. But as long as you have a big divorce proceeding in the background of a company like this, there's no incentive to, get the stock higher, because depending on how the assets are split up, if, say, half of this asset goes into the hands of somebody who really doesn't care about what the excess dreams about the future are and just wants to liquidate, that's a substantial amount of stock that the market will have to eat. So for now, Perpetua Gold Corp, it's just as well that it's stuck in this perpetual permitting treadmill, but for people with a longer-term outlook, it's an excellent buy on gold doing nothing worse than just staying exactly where it is, and inflation moderating after a year or so of these 8 to 9% levels that we have right now.
John, Tower Resources released positive drill results for the Lightning Zone discovery at Rabbit North. Why did the stock just spin its wheels?
The news was very positive. They reported the discovery hole in early January. This is on the Rabbit North project. They call it the Lightning Zone. It's a new style of mineralization for what has always been regarded as a copper porphyry play. It's southwest of Kamloops, of the Afton area. But the copper zones have never really been large enough to merit development. So it's been a teaser of a project that Tower Resources has had for a number of years. But this play emerged in 2021 as a result of a till sampling program that Stu Averill's Overburden Drilling Management conducted, and they discovered this sort of 300-400 meter wide golden till dispersal train that actually stretches for 10 kilometers or more well off the property. And they drilled it late last year, and at first they weren't getting anything, but then they moved up ice from where the train starts and found this zone with hole 26, which was the discovery hole. And they've drilled 6 holes since then. Hole number 33, for which results are still pending, that extends the strike to about 200 meters to the northeast. There's a hole about 400 meters northeast drilled in 1997, which averaged 10 meters of 12.4 gram per ton gold. And the purpose of the first 2 holes that they drilled this year was to figure out the orientation of this structure. and they now know it is a near vertical deposit. It has a high-grade core to it, plus it has a significant mineralized envelope that also could lend itself to an open pit mining situation. They published the results for hole 28 and 29 on Wednesday, and the stock traded 2.2 million or so shares and really didn't and closed unchanged. And you ask yourself, well, this signals that they now understand the orientation of the structure. They've got good visuals in these other holes. They've got one that even undercuts hole 26, which was the discovery hole, and it all looks very similar. So they are quite pleased with the consistency of the gold mineralization, where you're getting these significant, 15, 20 meter or up to 40 meters of true width of running 5 gram per ton gold. You can build ounces pretty quickly. But the company had a bit of bad timing in that on Friday, June 24th, 5.7 million warrants exercisable at 10 cents expire. And these, of course, are obviously in the money, but not everybody has money to exercise warrants that are in the money, so they have to sell stock. So the company has been churning as these warrants get exercised, and and at that 35 cent range, somebody's making a 200% plus profit on their warrants. So they're selling warrants, shares against the warrants to exercise them, which has prevented the stock from really developing an uptrend in response to the news. But by next week, this pressure should be gone. There's almost no warrant hang after that, and the company will have about 1.5 million working capital. And very importantly, they are in a position to resume trading. They expect the remaining 4 holes in the next few weeks. They've been getting them in batches, pieces of it. I don't see any signs that they are suddenly being very quiet about the next batch of results coming out. So I think they're seeing confirmation that, there's no visible gold in this system. There's very low sulfide, but they can see the structure. They have one intriguing hole, which is the number, I think it's 31, which intersected this intense veining, which is not part of the other holes, and which also has some chalcopyrite visible in it, which is a copper mineralization. It's part of the same trend where they can see it for at least 200 meters projecting in the northeast direction right now. And the worst they think is that, well, it'll be similar to the grades that we're getting with the holes 26, 28, and 29. But depending on what the meaning is of this cross structure that has maybe introduced a different mineralizing system into this mesothermal mineralized structure, we could see a pleasant surprise on the upside. But more results coming in the next few weeks. They hope to be back drilling. They haven't yet laid out a drill plan because they want to see the final results so that they can locate their drill pads. Apparently the permitting is not going to be this lengthy cycle, and apparently they have a drill lined up, which has become a big problem in many parts of North America, is having a drill rig available to continue drilling. So even though we're in sort of a slump of a market in the summer, tough to raise money, they've only spent $1 million to take this project from nothing in the past year to its current stage. They've got $1.5 million in the treasury, and this is an exciting emerging discovery. It's in southern British Columbia, road access. In winter, it will need a winterized camp if they plan to drill through it. But with step outs, 50-meter step outs going down dip and a long strike, that's going to be easy to quickly build more tonnage, and depending on what the grade is, the ounces. The wild card is, what is the actual strike of this thing? Is it maybe like just 400-meter strike with sort of a 40, 50 meter wide zone that goes down 500,000 meters? Or is there strike extension possibility? The narrowness of the dispersal train makes people think, well, you've got a deposit that's sort of longer in depth than it is along strike. But as Stu Averill was pointing out, there's a lot of basalt floods and stuff in this area, which may have obscured the exposure of this system. So they're going to have to do some more work to see how far this system strikes and because it is a very intensive mineralized system, and it's unlikely that this thing just has a narrow 300 to 400 meter long channel through which the fluids flowed.
John, Arizona Silver published new drill results for the Philadelphia gold-silver project in Arizona. Why did the stock sell off?
This was the deepest hole that they have drilled on this property, and it yielded 6.7 grams per ton over 2.38 meters, which is not bad. However, the earlier up-dip holes were better. For example, they had 16.9 grams per ton of gold over 3 meters and 10.8 grams per ton over 4.4 meters. And so as you chase this vein down dip, and this is about a vertical depth of about, or a downhole depth of about 217 meters that they intersected this vein, it's not a good thing to see the grade start to decline and the width not to go up. However, because they're drilling core, they're able to look at the textures, and you get these epithermal experts coming in and saying, you know what? You're still above the boiling zone. And based on their estimates, it probably is within the 350 down dip projection of this vein, which dips at about 60 degrees. And that would put it within 300 meters vertical depth, which would be the limit of an open pit mine. Now, the high grade portion of the Philadelphia play is only one dimension of it. And this could end up being chased deeper and become an underground mine if they find a high grade bonanza zones at depth. Then beyond 300 meters, it would become an underground mine. However, what they observed in last year's drilling at the southwestern end of this Perry vein, and the Perry vein has a strike of at least 1,000 meters, covering the Rising Fawn claim to the northeast and the Perry claim to the southwest. They observed that there was an envelope of low-grade mineralization in both the hanging wall and the footwall of the vein. Now, the vein is a narrow sort of sheet-like tabular body that gets elevated gold grade. The fluids pass up it, but if the system's strong enough, the fluids also infuse into the surrounding rock. And they had decent widths in this area in the sort of typical 1 gram per ton range, and they realized we have a potential bulk tonnage target here. The vein outcrops in various parts of the strike. The whole strike of the system's about 3 kilometers long. It has been the focus of small-scale underground mining since the turn of the 19th century, but nobody has ever done any serious drilling to chase the down-dip potential, and certainly nobody ever paid any attention to the low-grade envelope. And the spatula holes that they just released, it's sort of close to the border between the Perry and the Rising Fawn claim, what they call the shark fin target area, because there's a rib of rock that sticks out of the ground, looks like a shark fin. And the important thing about this drilling program is that it shows that, yes, the vein is still there. Yes, it has a high-grade component. And yes, most importantly, and this is what was lost on the market, that this hole, it had 78 meters of 0.96 gram per ton gold. And that, of course, isn't a true width because the hole was almost vertical in where they drilled it. But if you look at the section that they published, we're dealing with a 30 to 40 meter thick mineralized footwall to this vein. And I've done some back of the envelope calculations. If you take that sort of 400 meter strike of the Perry vein from the part that was drilled last year at the southern end all the way to this northern end, you end up getting at say a 35 meter thickness and a 2.6 specific gravity. And you take it down to a down dip 350 meters to reflect a 300 meter vertical depth, you get a tonnage footprint of 13 million tons. Now, a lot more holes are going to be required to figure out what the average grade of this is, but based on what we're seeing in these results, 1 gram per ton is a reasonable guess as to what that grade for the bulk mineable portion might be. And that would represent, about 400,000 ounces of gold. And because there is a silver credit that runs between 5 and 10 grams per ton, there's another potential 20 to 40 million ounces of silver associated with that potential outcome. But this is not, and of course, one thing to keep in mind is when you're looking at a body that's only 40 meters thick, dipping about 55 degrees or so, you're going to have a lot of waste rock. So I did a waste rock calculation, and the strip ratio is going to be somewhere between 3 and 3.5 for 1. In other words, for that 13 million tons of ore that they would haul out of there, you would have to mine about 45 million tons of waste rock. Now, they've got 2 holes pending. One core hole they've drilled in the southern end, right smack in the middle. They call it an infill hole because all these other holes were RC holes. And you want a core hole to properly understand the relationships between the grade changes and the surrounding rock. And that hole is pending. They think they will have that in about 3 weeks. But another important hole is a 350-meter step out to the northeast on the Rising Fawn claim. And this hole, they've described it as having good stockwork quartz mineralization. And I asked Greg Hahn, well, what does good mean? And he says, well, we're seeing that sort of 30 to 40 meter envelope, similar to what we're seeing in the Perry vein area and the shark fin area, except that the northeastern end of the Rising Fawn claim, this is an area where Meridian during the 1980s punched a number of relatively shallow RC holes, and these ones did have short high grade intervals, but also had the lower grade 10 to 30 meter intervals, and in this case up there it's 1 to 2 grams per ton gold. So the thing that we're waiting to see is when you do this 350 meter step out, does it confirm that yes, the little high grade vein is there, but that the footwall is similar to what it is with the rest of the Perry vein to the southwest? And if we can see that, then we could potentially double, because you're basically doubling the strike, you double the potential outcome to sort of 800,000 plus 40 to 80 million ounce silver as a bulk mineable target. In terms of high grade, it would be considerably less. So for me, it is the bulk tonnage outcome which is of great interest. So you ask yourself, why did the stock go down? Why does this company with 77 million fully diluted and 25-cent stock price, why is it carrying only an implied project value of about $20 million? Well, if you've ever been to the London and used the underground, the loudspeaker will constantly warn you, mind the gap. There are 2 important gaps within this sort of 1 kilometer sequence of patented claims. One is about 200 meters between the Perry South drilling done last year and the shark fin drilling done this year. And then there's the 350 meter gap between the shark fin and the hole that for which in the Meridian area for which we're awaiting results. And so while it's fun to connect the dots, until you have holes into these gaps, you can't assume that this sort of tonnage extrapolation that I'm talking about will become reality. You need to put the drill holes in there. And here's the reason why the stock is soft rather than responding positively to the latest drill results. In the press release, they said that they hope to have a rig in the fall. I'm saying, well, you just had a core rig. You drilled all these holes. Well, the core rig was contracted to go somewhere else when they were done with these holes, and of course they couldn't plan additional holes until they knew what the results of these holes were. Now, in the Perry claim gap, they have to use a core rig. And the reason surprised me. Core rigs are smaller than RC rigs. They have a smaller footprint. The terrain in that Perry gap area is quite steep, and they need to build roads into it. And a core rig is smaller, so it's much more efficient to get a core rig into it. And on the Rising Fawn claim, the terrain is easier, so they can go in there with RC drilling. So right now, they're hoping to get either rig and rigs are in big shortage. Crews were in shortage last year. Rigs are in shortage now. Sometimes the parts for a rig are in shortage, especially in the United States. So the market's looking at this and saying, okay, we got 2 more holes coming. One is an infill hole, and those usually, at best confirm what we already know. The other is a hole at the northeastern end, which could be important, but what we're really looking for is confirmation of what we already know. So the bias is more on the downside, with negative results coming to hurt us. So there isn't any expectation that anything fantastic will emerge from these next 2 holes, and then we have a waiting period. And then I asked Greg Hallen, well, what about, when you get if you get a core rig, can you step back and drill down dip from the hole that you just reported today and target where you think the bonanza zone is? And that's when I realized, these are the patented claims. There are 3 patented claims that are sort of stacked end to end, the Perry, the Rising Fawn, and the Rasika. And permitting is easy on these claims, but they're right on the edge, which is why this hole was a near vertical hole. They have to step onto the unpatented BLM claims to the east to drill proper angle holes to assess the down dip potential of the shark fin area. And I asked Greg, well, how long before you get that permit? And he I wasn't sure whether he was being optimistic or glum, but he said, I think it will be less than a year. So you think about this, to follow up an indication that you're very close to potentially getting bonanza grades at the bottom of what would be the open pit, and you might have to wait anywhere from 6 to 12 months just to get a permit. So the stock, the big missing piece is the ability to generate more drill results in the near term. And we're in a market where if the general mood is everything's going to get worse, interest rates are going to be jacked higher, the market may react negatively to each one of these increases. The resource sector really shouldn't be affected by it, but unless you have news flow coming, such as is the case with Tower Resources, which expects to be back drilling, expanding its discovery, the Lightning Zone at the Rabbit North project, if you're not in a position to do that, the market's going to stand back and say, okay, I'll bottom fish with you. So I've maintained Arizona Silver as a bottom fish spec value rated company. They still have about $850,000 working capital after paying for this program, so they are no need to raise money and dilute at these levels. So if you have the patience and want to just wait 6 months to maybe even just 3 months, this is an ideal one to accumulate during the summer lull while they wait to get hold of a rig so that they can resume demonstrating that indeed this whole Perry vein system does connect over a 1 kilometer strike and perhaps even beyond, and that it does represent a bulk tonnage target of anywhere from 10 to 20 million tons with a potential of 400,000 to 800,000 ounces of silver and 20 to 40 to 80 million potential ounces of silver and 400,000, 800,000 ounces gold. So it's an excellent scenario to accumulate now if you just want to sit out the summer and relax, and if the stock goes down, well, you just accumulate more.
John, thank you so much for the update.
You're welcome, Jim.
We've been speaking with John Kaiser. I'm Jim Goddard. Comments made on Kaiser Watch are an expression of opinion only and should not be construed in any manner whatsoever as a recommendation to buy or sell any financial instrument at any time. Archived online at kaiserresearch.com.